Just so everybody at home understands, I remember the first time you and I met. It was at a Connecticut RIA.
Connecticut RIA, I think 4 years ago now.
Yeah. I mean, were you even
Three and a
married
half.
at the time? Were you even
I
married?
was. I was.
Okay.
I've been married. We met right before my wedding anniversary. And then you were hosting an event in, I think, the Palisades. And I wasn't able to go for that because I couldn't convince my wife to go on our anniversary. But I was able to convince her when we went back up to my parents' house up in Boston to go to Boston College to see you speak for an entire day.
Yeah, that's right. That was a good time. That was very good.
It was.
But the thing is, you didn't even have any kids when I first met you.
No, now I have a 2.5-year-old and an 8-month-old.
God bless you, man. God bless you. And not only that, you didn't have any multifamily when I first met you either.
No,
All
I
right.
did not.
So I tell you, there are. I say this over and over again. There are certain traits that people have that I know they're going to be successful in this business. And right from the very beginning, you were in sales and marketing. That was your background, right?
That's correct.
Yeah.
Sales and
Yeah.
marketing and project management or program
Yeah.
management.
Excellent. I mean, and you really
Yeah.
went after this from a sales and marketing standpoint too. You definitely did. So
Yeah.
bravo to you. What'd you do? Give us an example. Let's talk about your first deal and how
Okay.
you and I worked together on it and how it ended up coming to fruition.
So first deal or lack thereof, I started here in Connecticut looking for multifamily between 5 and 25 units in Western Connecticut. Just started first with direct mail marketing, as
Yeah.
well as just broker relationships. I think the first deal that we got under contract was in the central part of the state in a town called Middletown, Connecticut. 37 unit property. It was very hairy for my first one. However, that never came to fruition because the purchase and sale agreement was never signed because I couldn't come to terms with the seller for it. So that one fell through the crack there. And then I think this was end of 2019, early 2020. There was another deal that LOI accepted, signed purchase and sale agreements. However, using you and your expertise, we were able to get out of the deal because it didn't hit the initial appraisal, which came in much lower than expected. And luckily, as a first-time investor, investing in that market 2 months before COVID happened, it was a blessing in disguise. It was mostly cash payments, and it was just one of those things. It was just you never want to back out of a deal, but I can hold my head high knowing that I had very little loss on that first one, but I think I was protected on it. Luckily for the seller, he was able to sell it the end of last year at the same price that we had it under contract for. Very good guy, very, very willing to work. But I think it's funny when you say the stars align. The stars aligned when we were able to back out of this deal.
Good.
So then things slowed down, and like everybody else, at the beginning of 2020. It's a daze now with everything that's going on.
Wow.
At the beginning of 2020, so March 2020. Everything slowed down. It was just deals weren't happening, transactions weren't happening, at least for somebody with very little multifamily experience like myself. So I just started figuring out ways I can connect with my own internal network. Started writing just a monthly newsletter as to some of the trends that were going on in multifamily. Here's what's going on with like distressed deals, which really haven't come to fruition because of X, Y, or Z or injection of liquidity into the market now. And it really started opening eyes to my internal network as to, wait a second, this guy has been in sales and marketing on the corporate level for the past 10 years. Now he's actually writing about multifamily, and you start talking with people who you never thought would invest with you that start to, oh yeah, keep me posted on your next deal. Keep me posted on your next deal. So the stars started to align, I'd say at the transaction started happening in like August, September of 2020. started to align with other people who have done it before to try to go bigger into other markets as well. There was another deal that I was jumping on at the time to help raise equity for it. And we found aluminum wiring in that apartment complex that was down in Louisiana, and again backed out of the deal, but had enough. It was able to escape it with very
what
little exposure.
What was a nice boy like you be doing down in Louisiana, Brendan? Come on.
Yeah, I know. It's funny that you say that, because one of my current partners is based out of Baton Rouge. So you're going to hear nothing bad about me talking about that gentleman. So
yeah, okay.
So that broke. That deal fell through, and a day or two later, a friend of mine who I connected with, based in Fairfield County, he got a deal under contract in the suburbs of Georgia. It's called Noonan, Georgia, about 40 miles southwest of.
I remember this deal.
Atlanta. 53 unit, distressed, opportunistic. 9 units were completely down. So came in, had a good basis with the purchase price, had a general idea as to what we would offer, what we would do for CapEx. Used one of our connections through the Multifamily Investment Academy with Kevin Jenkins, and he helped us source non-recourse debt. Got that deal closed a year ago tomorrow. So we will be owners for a year now for this property. And the tailwind.
Yeah, give us what's happened over the last year.
What has happened over the last year? Tailwinds have been in our back. We were underwriting the deal at renovated units at $975 per unit.
Yeah.
We exceeded that with the first lease up at about $1,100, starting in like June, July, when we did like what we call like an owner renovated units. We put in just over $20,000 in interior renovations for for each unit, and we're now pushing $1,400 for those renovated units.
You're saying that much per unit for renovations?
Yeah, we came in and we're doing
full gut rehab.
Full rehabs, putting in washer dryer. Like we have all-in-one washer dryer. Very nice kitchen cabinets, stainless steel appliances, really trying to reposition the community from a C asset over into like that B- class asset.
What's really going to happen for you, the beneficial, putting that much money per unit in there, is your repairs and maintenance budget is going to drop considerably.
It's funny that you say that, and it must go with the history of you being in multifamily for this long. But yeah, no. Yesterday we got our January financials, and we're operating the property right now at a 38% expense ratio.
C-class property. That's unbelievable. Yeah. Now, wait a minute. Is it all bills paid property or tenant paid utilities?
Tenant paid utilities.
Oh, beautiful. That's fantastic. Bravo. Oh, that one's going to be, that is a perfect example of the millionaire maker right there. Mm-hmm. I mean, to get that much more on your revenue and to keep your expense that far low. I mean, and move. I mean, hopefully I think you did. You bought it at the right price, and that cap rate's going to move in the right place.
It's moving in our direction.
Those two little kids of yours are going to college now. They're going to college, Brendan, thanks to you and me.
Yes. So we obtained a bridge loan on that deal. We have a 15-month minimum interest period that expires in May. So we're going to be going up for a refinance at that time. We were doing a European debt waterfall for syndication, where long story short, GPs don't make any money on the profit share part of it until we return at least 7%. We had 8% IRR on the deal. So if you invested $100, you needed $108 back before that profit split comes into play. We're going into our refinance, and we're expecting to refinance 90 to 100+% of the money. So our equity multiple at the time of refinance is getting 0.9 to 1+. And then that's the passive income that everybody loves to hear. There's very little capital risk at play for our limited partners. and now, just collecting that, however much we get based off of the LTV as well as the rates going into it. And, with interest rates going up, it's still economically feasible for us to be able to maintain the property at these levels and still clip a nice coupon on it.
Okay, now, are you doing anything where you're going to buy out your investors, or are they just getting their equity back?
They're going to get their equity back, and we're doing
man.
everything within our power to have a second deal ready, third deal under contract, or fourth deal, wherever we may go, at that time that refinances, because we don't want them, taking that money and putting it elsewhere. Because, right now we have a case study as to, this is the type of business plan that we're implementing, a true robust value add strategy. And then, you wait a year, let us stabilize the property, execute our business plan, refinance, and throw the money back at you. So it's a snowball effect for you. And that's how we make our limited partners more money for it.
Yeah. I mean, the names of some people in my group who do that exact same thing. They never have to worry about money, investor money. It just keeps coming right back to them.
Yeah, I hope that's the plan, because luckily the first deal that we did, it's a humbling experience raising capital, especially with somebody like myself who has very limited real estate exposure. So, going in thinking, I'm going to raise $500,000 just like that. No, let's take that $500,000, the number you think you're going to do, multiply it by 20%, minus $50,000. And that's probably what you're going to get from people who don't really have a track record of you. However, we just closed on a deal last week, and I 3 times my capital raise for this time around. So I'm happy about that. But it's repetition. And
how long has this taken you? 2019. It's taken you 2 to 3 years to get to where you are now.
3 years, right?
Just like say, 5 years. 5 years, you'll be your life will be changed.
Well, that's the 2-year goal, is to be doing this full time and within the 2 to 3 year period.
Okay, so that's about where you are right now. You're still working your regular job, but you're kicking ass on the multifamily side.
That's correct. We got another deal under we closed the deal on so that would be 2/11 of this year. So almost a year to the day. We closed a 70-unit property in the emerging market in the Charlotte market, called Rock Hill, South Carolina. Very similar bit.
Wait a minute, how many units is it?
70.
I might have taken a look at this 1 year ago.
Okay.
Yeah.
It's in the path of progress. About a mile away from historic downtown Rock Hill.
Is it brick?
Yeah.
And is it kind of in a tough market, a tough area a little bit?
It's in the path of progress, we'll say. So if you look, there's a mobile home around it, and if around the mobile home park, there's a single family development going on. So
you know what? I tell you, I think I looked at this deal probably about 4 to 5 years ago for another client, and I'm like the veterinarian who remembers the dog's name but can't remember the patient's name. And I remember like every multifamily any client has ever brought me. And Rocky Hill, I remember that we're looking at 2 properties in that particular area. I had spoken down at the Charlotte, North Carolina RIA Club, and people were bringing me deals. And I just remember that size property. It was a good size property. And so that, oh man, you got that, you closed on that one.
We closed on that.
Yeah.
That was, we've owned it for 2 weeks now going through, we have a $2+ million CapEx budget for this property.
Oh, wow.
$30,000 per unit. That's a combination of interior and exterior upgrades. Going to put in a playground, dog park, barbecue area, and really reposition the property again. We've found success with including these type of amenities in this workforce housing, and it makes it a much more inclusive and community that people are happy to go to. And we're excited to see what happens with it. Really excited to get our hands dirty.
On that property, I got 2 questions. First off, what type of a VIG, what type of a spread are you seeing on the existing rents and what you think the market will do?
So we're conservatively running to a $1,100 average rent on that property, and right now we're about just under nine, we'll call it $850 we're at right now. So we're thinking we can do about $250 per unit.
That's great.
And we think that's conservative. We've a bunch of our general partners have been going in and out of the area as we close the property. And at this point in time, we just did a recent rent comp analysis. And what we think is our benchmark, what we really think we can go after, is still $100 less than what we're underwriting to. So we still think if we close that gap anymore, you get that $25, $50 of rent growth on a 70-unit property. It should be something that should be nice returns again. But we think it all looks good on paper until it's executed. So
right, exactly. But I got to tell you, your numbers for your rehab are incredibly generous. I think you're incredibly conservative. I mean, to do $20,000 per unit, you're changing that whole look of that property, not just putting some, superficial facial, changes to the property. You're making this a nice place to live within the four walls. So bravo to you. This is as I mentioned earlier, it's a robust value add strategy.
Yeah. You're seeing a lot of things, anything that's published by brokers nowadays, you get that value add second generational capex, where the broker's underwriting a $5,000 value add per unit strategy. Yeah, that's going in, painting some cabinets, and
nowadays $3,500 are the turn costs,
right?
Not rehab costs.
Yes, that's very true. So it's working out well. We're hoping to. We're very excited to be on this deal as well.
I remember. I think it was a dentist. That brought me this deal. Years and years ago, and it's so good to. I tell you, Brendan, I've been in this business long enough that I've actually seen some properties that I've owned being bought by young bucks like you. So that's kind of tells me. I tell you, 72 years old, Brendan. I've been doing this forever, for crying out loud. So, hey, listen, what's the next big plan for you?
The next big plan is it's the refinance for this deal down in Noonan.
Pulling the money out,
putting it back into play. And I'm working more of the asset management, so lender relationships, as well as property management relationships as well. We found a very good team that we're working with, and we're hungry to continue to find more deals. We think where we're looking is a little better than when I initially started looking in the Connecticut market, where I live now and reside. We're looking in. I think this is a book you and I actually talked about. I'm looking up to see if I even have it right now, but Big Shifts Ahead. Where are people moving to? And we're focusing on emerging growth markets.
Okay, I got a new book for you. Mauro Guillen, Mauro, Mauro is his first name, Guillen, Guillen, I believe his last name. The book is called 2030. The guy's out of Yale, right down the street from you. And it follows up on Big Shifts Ahead. And that's the next book. Because remember, Big Shifts Ahead was written in 2015. And it was a 10-year window, and we're coming up to the end of it. Now you got to look even further ahead, and 2030 is the book to check out. So definitely look at that one. But that's great. But Brendan, I remember when I was talking to your parents, and they were like, "I don't think your kid's ever going to amount to anything." I said, "No, just stay with them. The kid's going to be a success. I guarantee it. But that's fantastic. That. Couldn't happen to a nicer kid too, Brendan. It was always a pleasure working with you and making sure you got off to the right start in this business. And bravo.
Likewise.
Bravo.
Yeah, I know it's for you and the relationship that we have. You've really helped guide me to where I've needed to be. For myself, just my experiences, having limited exposure with in real estate. I've read books, I've done podcasts, but it was very similar to a college, going through your college years. Your classes or more of my freshman and sophomore year is gaining the fundamentals to be competent within there and have confidence talking to other people, specifically in the brokers, your lenders, your property management companies, the talk to be able to be like, okay, this kid actually somewhat kind of knows what he's talking about.
Yeah.
And then the evolution from there. And it's nice to see that I hopefully have graduated at some point and earned my diploma. It's great.
And I'll tell you, the other cool thing about working with me is if my cell phone rings and I see it's you, I can't wait to talk to you. I'm like, oh boy, he needs me for something. What do you need? You need me to send you money, son? You need me to take, he's like, you're like one of my kids, for crying out loud. So, but no, that's Brendan. I'm so happy for you. I'm so happy also for all your other successes with your 2 little babies. That's so cool. Good for you. Those kids are going to grow up with parents who can spend a lot of time with them because of the lifestyle that you're going to be leading in a couple of years. Absolutely. And then the beautiful thing,
find your why.
Yeah, exactly. And not only that, but what's going to be beautiful is the legacy you leave those kids. You have no idea that you could be setting them up and their kids up for the rest of their lives because of what you're doing today. And that's so cool.
And I appreciate that.
Yeah. So.
It's nice. It's nice to say. And it's a grind. This isn't an industry for everybody.
Exactly. This whole concept of passive, everything's passive. There's nothing passive about this business, but it's the best business in the world to be in because it's going to provide you income and assets. That's the thing. Right. You work all your life for income and you walk away with nothing. But the beautiful thing about multifamily is you get a nice income and you get nice assets, that you can leave your family. So bravo to you. Brendan, thank you so much for being on my Success shows. And say hi to your beautiful wife. I think I met her once, and she's far too good for you. But it's between us.
I appreciate that. Yeah. And if for those who are listening, if they want to find out more about me, you can find me at bkcholding.com. That's bkcholding.com or brendanchisholm.com.
Yeah. B Bravo K Kilo Kelly. C Charlie. Holdings.com. Sign up for his newsletter. I love getting it. And if you're looking to get in this business, this is the type of marketing you need to do. And this is how I was able to do it. Brendan followed exactly what I said, where you just let people know what you're up to. Just keep sending them, getting in front of them. And like you said before, the people will call you up and say, hey, yeah, I want to find out more about multifamily investing. And that's how we did it. And that's how you did it. So that's so cool.
Awesome.
So, all right, pal. Good to see you. And I will talk to you soon.
Likewise.
Thanks, Brendan.